Hello everyone, welcome back to my video. Um, Today we will be discussing and going into divergence. What is divergence? How is divergence created? And how to react off of divergence, as there is different levels of divergence, different types of divergence. So we'll be going into all of that and how it affects your trading as far as your setups and how important it is to spot divergence first before making any, you know, buying or selling positions in the market. It'll give you basically a heads up beforehand, as we will be going into the RSI and as well as the MACD. That is what oscillators I use for spotting divergence, and it's proven to be the best oscillators to use in implementing this particular strategy. Okay, what is divergence? Divergence is the situation in the market where the price of the candlesticks, as far as the structure of the candlesticks, doesn't match the oscillator. Basically, it's the highs and lows. So I put this example on the chart. This is Bitcoin versus US dollar. Um, and this is the current price. So we are on the 4-hour chart. Um, and basically, as you know, Bitcoin is in a downtrend, and it hasn't broken out of that downtrend yet. So we would be, if you were margin trading this particular pair, you would be looking for, continuations to the downside. So one way you can find these potential moves is looking at divergence, as far as looking at the RSI, looking at the MACD, evaluating the market on that standpoint, giving you more confirmation on whatever decision you wanted to make in the market. So this particular situation we have here, it was a recent move down Bitcoin has made in the last 2 weeks. So just to give you an example, what happens in the market when looking at divergence, as you can see, we have the RSI in purple. I hope you can see visually what is happening at this point here, okay? And if you pay close attention, this high here on the RSI is this high here on the chart. So as you can see, we have some divergence that developed on this particular leg up, okay, here and here. So as you can see, if you look at the slope of the particular move, this one is moving up, and as far as you know, this on the RSI is slanted down. So that would be identifying the divergence in this particular move, continuation move down. So as you can see on the MACD, we have the same divergence that was created on the MACD as well. So, that gave you a nice indication that, we were going to have a continuation down on this particular leg. Even if it was going to make a correction, it would still see some downside. So as you can see, the different types of divergence, I can't go through the charts and show you guys the different types of the divergence, but I have a chart to show you. So if you look closely on this chart, as you can see, it's regular divergence, and there's hidden divergence. When you're looking at divergence, you have to look at it in an inverse way. So if you've seen divergence on the lows, the lower lows, and the higher lows, then it would be a bullish situation in the market as far as indicating you what direction it's going, when it's going. When you're looking at it on a downside aspect, it would be the higher lows, the higher highs as well as the lower highs. So make sure you take that in consideration. and the difference between the divergence. Regular divergence and hidden divergence is a lot different. It's basically the flip-flop of the oscillator to the price. So that you would look at both, of course, but considering the patterns that it makes, it would be classified in different categories. So as you can see, we have the regular divergence, hidden divergence, and you can see visually, take a screenshot of this and make sure that you have this in your notes, just to give you a better idea that you have something of reference to go by when you're implementing these trades. So get a screenshot of that. I'm going to go back to the chart. So a lot of the times we have these in the market. This can be on a long term or on a short term. Okay. Let's go into the smaller chart to see what we can decipher on a short term scale as far as the factual information of this strategy. Let's go to the 15-minute chart. Let's see if we can get some structure here. Okay, now when you're looking at divergence on a smaller scale, you have to take into consideration the scaling of the move. So if you were trading on the 15-minute chart, you wouldn't be, holding these trades for a long period of time. You would have to do it accordingly to, whatever structure that you see. So a lot of the times in the market, these situations happen where you have divergence, okay? A lot of the times you will not see divergence as much on the smaller charts as it's developing quite quickly on the smaller charts on a smaller scale. So it's relatively hard to see on a smaller scale. But those big turns in the market as far as the long-term corrections and the long-term reversal patterns, divergence is definitely key, and having an eye to see divergence can give you some good and almost perfect timing on reversals and if you're taking counter trend trades or continuation trades. So this is very vital to grasp in the market. I'm going to show you another situation where divergence took effect. And this is where I wanted to show you at this point when Bitcoin has reached the highs of 20,000. I'm going to show you what happens when, you have divergence. So as you can see, we have a situation where this made a new high, but we had a continuation that just broke that high and we had a reversal down. Considering structure and what we went over on the trend, how to identify the trend, and we went over the rules as far as the zones being violated within the market. We have a tendency to, create other things as far as divergence as well to give you more confirmation. So if you see here that we have basically a slant here, but when you see it on the chart, it's up, okay? So that's basically giving you a indication that we are at a turning point of some sort. So this is basically just putting light bulbs in your head, making sure that if you were in any buys that, it would be time to take profit, okay? And as you know, there's different, divergence. This is divergence to the downside as well, to, scout out these counter trend trades. If you were interested in that, there's a lot of different ways to use divergence. Grasp this information because you will need this as reference when we will be discussing the overall strategy that you know that you should be implementing, you should learn to, capitalize and make some profits in the markets, in the cryptocurrency markets, as well as you can transition this information to the Forex market as well.